All right, so you've got a general insurance interview coming up. Perfect. We're going to give you the ultimate strategic edge. In just the next few minutes, we're going to completely deconstruct how this industry actually ticks, giving you the super clear framework so you can walk in there and confidently nail any question they throw at you.
So let's start with the big one, right? How does an insurance company actually work? This is this is the million-dollar question. And, getting this right shows you get the whole machine, not just like one little cog. So let's break it all down.
Okay, the easiest way to wrap your head around this whole thing is to think of it in three core pillars. You've got the theory, that's basically the rule book. Then there's the engine, that's the day-to-day, the nitty-gritty operations. And finally, the scoreboard, which is exactly what it sounds like, how the company keeps score with its finances. Trust me, this three-part framework is going to make structuring your answers a breeze.
All right, let's dive into pillar number one, the theory. Think of this as the rules of the game. These are the absolute bedrock principles, the legal stuff that forms the foundation for the entire industry. It's really the why behind every single decision that gets made.
Now, if there's one concept you absolutely have to know, it's this, the principle of indemnity. To put it simply, it just means that insurance is there to put you back exactly where you were financially before a loss happened. No better, no worse. It's all about protection, not about making a profit. And this visual here, it makes it super clear. That indemnity ceiling shows that, hey, if your asset is worth $100,000, the insurance payout can't be more than that. And this is so critical to prevent what's called moral hazard. Basically, it stops people from getting any funny ideas about causing a loss just to cash in. It makes sure insurance stays a safety net, not some kind of lottery ticket.
Okay, so this naturally leads us to another huge legal concept, insurable interest. I mean, think about it. You can't just go and insure your neighbor's house and then, cross your fingers hoping for a fire. You have to have a direct financial stake in whatever it is you're insuring. Without that real valid link between you and the asset, well, it's not insurance anymore. It's just gambling, and the policy is totally void. And here's a little pro tip for your interview. When you bring up insurable interest, you're not just spitting out a textbook definition. No way. You're signaling that you get the deeper legal and ethical rules of the road, the very things that keep the entire insurance world from turning into a giant casino. Now that shows a whole other level of understanding. Okay, on to pillar number two. We've got the rules of the game down, so now let's pop the hood and look at the engine. This is all about how an insurance company actually runs day to day. We're going to follow the life of a policy from the very beginning to the very end. So every single policy goes on this 5-stage journey. It all starts with submission. That's the intake, gathering all the info. Then comes underwriting, and this is the real heart of it all. This is where they evaluate the risk and decide, okay, are we going to take this on and for how much? If it's a go, the policy gets bound and you've got a contract. After that, you've got servicing for any changes that happen along the way. And then finally, the all-important renewal, which is key to keeping customers happy. But here's the thing. It's not just a straight line. Not at all. Once that policy is live, it enters this maintenance loop. Life happens, right? A customer's situation changes, they need some servicing, maybe an endorsement. Then, as the policy gets close to expiring, boom, it loops right back around to underwriting for renewal. It's this living, breathing cycle that's all about managing that customer relationship for the long haul. And that brings us to our third and final pillar, the scoreboard. So we've got the rules, we've got the operations, but how does a company actually know if it's winning? How does it stay financially healthy? Well, this is where we get into the money. This is such a great way to picture how the money moves. Just think of it like a machine. The premium income, that's the fuel. That cash then gets stored in reserves, which, by the way, is a legal requirement to make sure they can always pay out future claims. And the outputs? Well, that's the claims getting paid to customers, plus all the other stuff like commissions and the costs of just running the business. It's a really simple but super powerful way to see the company's financial core. Now, this whole scoreboard is run by 4 key principles of financial discipline. Let's make them make sense real quick. Accrual basis. That just means you log money when it's earned, not just when the check clears. The matching principle is all about lining up your costs with the money they helped you make in the same period. Prudence, or conservatism, means you're cautious, you recognize potential costs right away, but you only count your chickens, or revenue, when they've actually hatched. And double entry, that's the classic accounting that makes sure the books are always balanced. All 4 of these together, they're what makes the company's financials solid and trustworthy. Okay, so we've looked at all 3 pillars one by one.
But the real magic happens when we connect them. Let's see how they work together to create the full dynamic insurance ecosystem.
And here it is. This is where you see it all click together in this constant feedback loop. The theory, like our old friend, the principle of indemnity, tells the engine what to do, like how to figure out a claim payout. And then that action, it gets logged immediately on the scoreboard as a claim paid. You see? Every pillar is constantly talking to the others.
So what's the big takeaway here? It's that you just can't have one of these pillars without the other two. The engine, that's your solid day-to-day execution, is what directly fuels the financial health you see on the scoreboard. And the whole thing, the entire system, is built on that rock-solid foundation of theory.
So there you have it. You now have the framework. This isn't just about answering questions anymore. It's about having a real, strategic conversation. You get the blueprint. So the only question left to ask yourself is, what part of this incredible insurance machine are you going to help build?